Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Tuesday, January 24th, 2023, and it's kind of quiet day in the markets. And, I was looking through some of the comments this morning on yesterday's videos, and what I there was a question on there which, this is sort of the whole point of today's video is, um, how can markets rise on aggressive selling, right? Because technically under aggressive selling, shouldn't the market be selling off? And, that's what I'm going to address today. So again, just really briefly, if you enjoy my videos, be sure to subscribe to the channel. And, if you find you get some value, be sure to like the videos. So I'm going to be showing you the example in US bonds, right? 30-year bonds. I'm using a 4-range chart here because, I like to use range-based charts on bonds because, they tend to be quite slow moving at times. And, if you're using a minute-based chart, it's going to be a little bit difficult to understand what's happening in the order flow since there's not a lot of price movement in certain times of the day, right? And, when you're looking at order flow, you also want to take into account the movement of the market, right? Just not seeing a big order hitting the market and trying to understand its effect on the market. You're looking at sort of the cumulative effect of the orders coming into the market. All right, so today in the bonds, there's a perfect example, right? That's why when I saw the questions and I was watching the bonds today, I thought, hey, this would make a great example in the video. So you can see the bonds moving up, right? We hit our low today, 129.16, just before 9 o'clock, and then we started putting in this rally all the way up to the high of the day. And on this move up, we're seeing aggressive selling that's taking place, right? Well, how do I know it's aggressive selling? Well, on the surface, the most easiest way to tell is by looking at the delta, right? The delta is the net difference between the aggressive buyers and aggressive sellers in the bar. Basically, the volume that's traded on the bid, the volume that's traded on the offer. Now, on most footprint charts, like my footprint chart that I use regularly, I have just the delta, max delta, min delta, cumulative delta, delta volume, and the bar's volume. You could actually, a lot of the softwares out there, I know mine offers it, is you could actually see what the actual volume was that traded on the bid and the actual volume traded on the offer. So I'm just going to throw that up here so, it just gives us an idea of what's taking place here. So just give it a second here. So I'll just add it, go into the summary content, add the ask volume, add the bid volume. Okay, so ask volume is going to be the first line, bid volume is going to be the second. Third one is the delta. So as you can see here, right, on the low, the delta is 701. It's a positive delta, right? So that volume traded on the offer is 25.53. The volume traded on the bid was 18.52. That difference is 701. It's a positive number because more volume traded on the offer, meaning that 2,553 contracts traded on the offer that were aggressively bought versus 1,852 sold into the bids there in this bar. And the net difference, 701, it's a positive difference because there's more volume traded on the offer, is telling me there's more aggressive buyers. Market moved up. That's what you expect to see, right? Then the next bar, positive delta of 51. And this time it was a little bit closer, right? The volume traded on the ask was 1591. The volume traded on the bid was 1540. So 1,591 contracts traded on the offer side in this bar versus 1540 was traded on the bid side, meaning there was 1,540 contracts sold into the bids versus 1,591 contracts bought at the offer. Okay, so what you're measuring is the aggressiveness in the bar, right? The aggressive buying, people crossing the bid offer line, people that were either working bids that went up and bought the offer, or people that just came in and bought at the market. That is the volume on the ask. The volume on the bid is people that were probably working an offer and sold into the bid. They got tired of waiting and sold it into the bid. They crossed the bid offer line, or people that are just coming in and hitting the bid immediately. Okay, so the next bar, also a green candle. Okay, so we got green candle, positive delta, green candle, positive delta. Now all of a sudden, we've got green candle, negative delta, minus 95. What's going on, right? you have negative delta, so you have more aggressive sellers selling into the bid than buying the offer, yet the market is still going up. What gives? Well, let's go over the math again. So what you have is 1,838 contracts bought on the offer, 1,933 contracts sold into the bid. Okay, giving you a difference of minus 95. There was 95 more contracts sold into the bid than bought from the offer, right? Giving you this negative delta. Now, granted, 95, it's not a huge amount. It's 95 contracts. It could be a difference of one or two trades. This bar could have just, late buying could have come in. I mean, there could have been some decent selling early. Late buying came in. When I see relatively small deltas like 51, 95, I kind of treat it as neutral. But right now it's negative 95. And what is going on? Well, let's look at the volumes. All right, you can see at 26, there were 729 contracts traded when it was bid there versus 581 when it was offered. At 25, there was 501 traded on the bid versus 434 when it was offered. At 24, there was 649 traded when it was bid there versus 254 when it was offered. So what you're starting to see is some signs of support, bidders coming into the market that are starting to absorb that aggressive selling that's coming into the market. And this is how markets go up on aggressive selling, because even though you have the aggressive selling, you got to still realize what's meeting it. Well, passive buying is meeting it. Passive buying is it's stepping up to absorb that aggressive selling. That's why the market is not going down, is because you have bidders in here, passive buyers, that are happy to be buying it at these levels, right? The selling is coming in. Because remember, right, markets don't go up because there's more buyers than sellers. Markets don't go down because there's more sellers than buyers. For every buyer, there's a seller in the market. But when you start thinking about passive buyers and passive sellers, in addition to just the aggressive buyers and aggressive sellers, that's the difference that order flow is going to give you in your analysis, as opposed to just regular following price, because now you're adding into it that element of volume that's traded on the bid, the element of volume traded on the offer, and whether it's strong or not. Then the next bar, another green candle. Okay, and you got positive delta. Okay, that's what you expect to see, right? We had that one bar with the negative delta here, but green, 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 right? Positive delta, positive delta, positive delta, the one bar with negative delta. Okay, but look what you have in this bar. You have a selling imbalance, 1774. Okay, so when you're looking at imbalances, you're looking at the imbalance in the two-way auction. When it was 28 bid at 29, 1,774 traded on the bid versus only 320 on the offer. That is a selling imbalance, more than 4 to 1. I use a ratio of 4 to 1 to determine my imbalances traded in this two-way auction. Just as here, one tick below, when it was 27.28, you had 347 only traded on the bid at 27 versus, at 20. This is 27 versus 1,884 trading on the offer at 28. So you have a buying imbalance here. Then you have a selling imbalance here. So what is actually taking place? Okay, so when the market's 7-8, it's trading eights, and then it turns 8 bid. So not only did you had that aggressive buying taking place at 8 here at 28. Once it turned 8 bid, there was a strong bid coming into the market, basically absorbing whatever selling there was now at 28. Before there was passive sellers at 28. Now you have strong passive buyers at 28 that are sitting here absorbing all that selling that's coming down. Now this bar still had the positive delta because there was still more volume being traded on the offers at the different price levels in this bar. But let's take a look at the next bar. Another green candle. Got a strong negative delta, minus 274. And it's trading higher. Okay, so in this move, you've had one from the bar at the low, 1, 2, 3, 4, 5 bars. 2 of them have negative delta. Okay, let's take a look at the volumes. Well, here volume traded on the offer at the ask is 3,258. Volume that was traded into the bid, the aggressive selling into the passive buyers, was 3,532, giving you a difference of minus 274. So you actually had more aggressive selling in this bar. You had minus 274 more aggressive sellers than aggressive buyers in the bar. Yet the bar went up. Okay, well, why did it do that? Well, why did the bar go up? Meaning you had the aggressive sellers there when it was at 130 even. Okay, there was 23.94 contracts traded on the bid, but you had a lot of selling coming into that bid, right? When it was even bid at 01, everyone is selling it, thinking, I can't go any higher, right? This line here is the opening price, which is, it is a level for a lot of traders, the opening price, hanging around basically unchanged. They're happy to sell it because, for whatever reason, maybe they're thinking, well, we have just our normal distribution day. This is probably right around, where the value was. I haven't pulled up a volume profile, but it's probably where the POC was for the day. So you have a lot of aggressive selling coming in there, but you have strong buyers. You got more people bidding than aggressively buying. And then once those aggressive sellers had, once their bullets ran out and they got no more contracts to sell, then the market starts ticking higher. That's what causes it to go up. It's not going up because you have aggressive sellers. It can't. You get more aggressive selling. So once that aggressive selling stops, that then the market starts going up, right? And you can see it's going up. It's not a heck of a lot of volume. 72 contracts, you got the 37. Then the next bar, it's a doji bar, opens and closes, basically at the same level, but still a nice negative delta, minus 400. It's actually one of these candles where it traded down and then closed up again, okay? But again, minus 424 delta. The volume that was bought on the offer was just 2,283 versus the volume sold into the bid of 2707. Okay, and again, this bar, so the bar, it was starting to sell off. It was looking like a nice big red bar, but what happened once those aggressive sellers ran out of bullets? That selling pressure is removed from the market ticks back up. In this case, you don't really have the selling imbalance like you had here, the 1774 against 320 or the 2394 against 288. Here it's kind of evenly distributed for the most part. The only areas that sort of out is this 923. It's just a shade more on the bid side than the offer side, but it's spread out over 4 levels. Then the next bar, another green candle, positive delta. Okay, sort of what you expect. So here you've had 1, 2, 3, 4, 5, 6, 7 bars, of which 1, 2, 3 have had negative deltas. Now you're on the 8th bar, negative delta, minus 180. Volume bought aggressively, volume traded on the offer at the ask, 1,344. Volume sold into the bid, 1,524, giving you a negative delta of minus 180, but you still have a green candle. Well, why? You got 843 here at 10, traded on the bid versus 299 on the offer, right? That was enough volume coming in here to absorb whatever aggressive selling was taking place to arrest this move from dropping lower in this bar. Now, again, remember, these are range bars. These are not minute-based charts, okay? So it's based on price movements. Then the next bar, again, another doji bar, open and close at the same level. Positive delta, 549. Okay, now we're still going up. Next bar, green candle. Big negative delta, minus 309. Got that imbalance, 1029. 1029 against 41. This imbalance is coming in at 13. Okay. You're starting to see the pattern here, right? What's happening here is you got a strong bidder to absorb whatever aggressive selling. So this market went up. Obviously, there was aggressive buying, right? That's what's going to move, removing the next offer and the next offer and the next offer is what causes the market to go up. But what stops it from going down is the supportive buying, the passive bidders coming in for size, the 729, the 500, the 649, the 1774, the 2300, the 1000, the 900, the 600, the 800, the 1061, the 1029. That's why this market is not selling off. You do have aggressive selling, but it's being absorbed by strong passive buyers. And then we went up to new highs. Okay, but it was pretty evident. I mean, you're not going to see it down here or here. It's a little vague at this point. You start seeing it grow a bit more here, even though you got the positive delta. You know, the clue is obviously this negative delta, but again, it's kind of small. It's not, it's not minus 450. It's just minus 95. This should get your interest up. And then by the time you get to this bar, so it's a decent move. I mean, I'm not saying, yeah, you would have bought it down here. No, you wouldn't, because you still got the positive deltas. But when you start seeing this unfolding, you can see the bidders just coming into the market. It's clear as day. Look at this volume trading right here on this side. 729, 51, 649, 1774, 2300, 900, 1000. This is your clue. This is, I think, the area where a lot of people, it sort of clicked with them that, hey, you know what, this market's got that supportive buying that we need to absorb whatever aggressive selling is coming in. And then we had this nice march up, and it happened pretty quick, right? It happened, this bar's 924 up until 956. So about 30 minutes. Went from 130.01 all the way up to 21. And you're still getting that supportive buying coming in here, here, even here as you're making the new highs. And I mean, look at this move from, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars from low to the high. How many bars with negative delta? 1, 2, 3, 4, 5, 6. Half of the bars. You don't see any red bars in here on this move up. So it was a nice, beautiful move up without any pullbacks, but you still see that negative delta. You still see that aggressive selling. So even though you have that aggressive selling, I mean, every bar is going to have aggressive selling. If there wasn't, it would just be all zeros here. But what you have is absorption, right? You have people that are bidding the market to absorb whatever aggressive selling is taking place as the market is moving up. That's what you like to see on a move. Now, in some markets, it's going to be difficult to see. If you're trading a thinly traded market, where it's a lot of zeros or 1s, 2s, and 3s, it's not as clear. It takes a little bit more experience to understand what you're looking at. But on markets that trade a lot of volume, obviously bonds, 10s, it's clearer to see. That's why I use the bonds as an example. So I hope you guys understand it now. I forgot the username that brought up the question, but that's how the market can go up on aggressive selling. Even though it's not going up necessarily on the aggressive selling, it's going up on the passive buying that is absorbing the aggressive selling. The aggressive selling is there, right? There's always aggressive buying and aggressive selling in every bar. But when you talk about aggressive selling taking place, you think of the market is going down. Here you have aggressive selling taking place that's being absorbed by the strong passive buyers, right? The people that are working bids. Passive sellers would be people working offers, okay? So in this case, it's going up because people are just catching whatever selling is taking place because, their view of the market's going up. All right, guys, I'll end it there. So I hope you enjoyed this video. Be sure to subscribe to the channel and hit the like button if you got some value out of it, and keep those comments coming. Bye-bye.